This is Nightly Business Report with Bill Griffith and Sue Herrera.
Back where we started, the Dow was unchanged today. That doesn't happen often, but nothing about the recent rally is ordinary.
Sour Milk, America's largest milk producer, files for bankruptcy as the dairy industry undergoes massive change.
Out of space, why one of real estate's hottest sectors is experiencing a big chill. Those stories and more tonight on Nightly Business Report for Tuesday, November 12th.
And we do bid you a good evening, everybody, and welcome. Nada, zero, zilch. That's what the Dow did today. It literally finished unchanged, closing exactly at the same level where it did yesterday. It's only the third time that has happened since the year 2000. The NASDAQ also had little firepower today, but it did hang on to log its 15th record close of the year, and the S&P hit an all-time high intraday, but failed to finish there. So here are the final numbers for this day. The Dow, it'll sound familiar, finished the session as it did yesterday at 27,691. NASDAQ was up 21. The S&P added 4. Now, even though the major averages are at or near these new all-time highs, the rally doesn't feel like your typical move higher. So we asked Mike Santoli to grade this recent run-up.
The stock market's run to record highs has taken many investors by surprise after a late summer bout of recession warnings. The question now is whether the rally is on a firm enough foundation to carry on. The short answer is the market's climb rates pretty highly on technical and fundamental grounds, but at some point in coming weeks or months, overexcited investor sentiment and stout equity valuations could present a challenge to rapid further gains. The push to fresh highs on the S&P 500 to 3,100 has been impressively broad and has been accompanied by notable strength in foreign markets as well. The tally of individual stocks climbing versus those dropping has also made fresh highs along with the indexes, suggesting healthy participation in the rally, and sectors most sensitive to an upturn in economic growth have led the way in recent months, including industrials, financials, transports, and semiconductors. The non-U.S. stocks have done even better than the S&P since August. That's a signal the economic activity is gaining traction worldwide as bond yields lift from record lows. The market's response to better than expected third quarter earnings, which are still down slightly from a year ago, suggests investors view last quarter as the low for profits ahead of better numbers in coming quarters. And the market's upbeat action since the Federal Reserve indicated it is not looking at further interest rate cuts also stands as a vote of confidence that a soft patch in growth has likely passed. The hazards now are potential overconfidence and full valuations. Investor surveys and gauges of trading activity show a sharp jump in optimism, which is a positive until it carries too far. And S&P 500 valuations based on expected earnings are near their highs for this bull market, meaning it is crucial for profits to start growing again if this rally is to carry through year end and beyond. For Nightly Business Report, I'm Mike Santoli.
President Trump today touted the success of the U.S. economy. In a closely watched speech at the Economic Club of New York, the president discussed domestic growth as well as the Fed and the trade war with China. Here's Eamon Javers.
President Trump keeping the details close to the vest here in New York today at a speech at the New York Economic Club that was widely watched in the financial universe for any indication of what the president might say about China trade. Would he announce a date? Would he announce a location for a trade deal? The answer to both of those questions was no, the president offering no new specifics here, but he did indicate that a trade deal might be in the offing. Here's what he said.
We're the ones that are deciding whether or not we want to make a deal. We're close. A significant phase one trade deal with China could happen soon. But we will only accept a deal if it's good for the United States and our workers and our great companies.
The president reserving his harshest criticism here, not for the Chinese government in Beijing, but for the Federal Reserve in Washington, which he says better get moving on negative interest rates.
We are actively competing with nations who openly cut interest rates so that now many are actually getting paid when they pay off their loan, known as negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of that money. Our Federal Reserve doesn't let us do it.
Largely today, the president using this formal setting for an economic speech to take a victory lap of sorts about the success of the economy during the course of his presidency, not laying out a lot of specifics, though, about where things are going for the remainder of his term in office. For Nightly Business Report, I'm Eamon Javers in New York.
In other news, while Boeing wrestles with fixing the 737 MAX and getting those planes back in the air, it may come as no surprise that new orders have stalled at this point. In fact, last month, the aviation giant saw some customers switch from the MAX to other models. And that news sent shares of the Dow component down more than 1% after yesterday's big run-up. Phil LeBeau has more.
Boeing's most popular plane, the 737 MAX, has become a little less popular. In fact, Boeing saw two of its customers opt out of orders for the 737 MAX last month. Instead, they now want to buy other planes in the Boeing catalog. Despite some MAX cancellations, Boeing's backlog for the plane remains robust, with more than 4,400 ordered. And the company now says it may resume MAX deliveries next month, sooner than some on Wall Street expected.
There's been the expectation that news was coming, that a return to service was going to be delayed. And news came that they are absolutely not anticipating a delay beyond that is going to go into January. So they're revving things up in December and expect to have planes flying in January.
The biggest question is whether FAA Administrator Steve Dickson has the same game plan as Boeing. On Capitol Hill, there are plenty in Congress who think the FAA is too close to Boeing and needs to be tougher on the company before approving the MAX to fly again. Dickson says that will not be a problem. Dickson's determination on whether the MAX is safe to fly will be based not just on the data and feedback of the FAA staff, but on his experience in the cockpit. As a licensed 737 pilot, he will fly the MAX with its updated software before signing off on whether or not it should be recertified. Phil LeBeau, Nightly Business Report, Chicago.
It is time to take a look at some of today's upgrades and downgrades. CSX was downgraded to hold from buy at Deutsche Bank. The analyst cites concerns over 2020 revenue and margin headwinds from lower coal prices. The price target is $74. The stock was down more than 1.5% to $72.75. Deutsche Bank is also making a call on Kroger, upgrading that stock to hold from sell. The analyst cites growing optimism about the company's digital offerings. The price target is $27. The stock finished up more than 1% to $27 even.
Live Nation was upgraded to outperform from in line at Evercore. The analyst cited the outlook for double-digit growth in operating income and its ability to weather any economic downturn. That price target now is $73. Shares gained a fraction to $64.74. And CrowdStrike was upgraded to neutral from sell at Goldman Sachs. The analyst cited the recent pullback in that stock over the past month. Price target now $55. Stock rose more than 1.5% to $47.05.
There is a new entrant into the streaming wars. Disney Plus today made its debut. Though demand was high, there were also some technical glitches. But Disney has high hopes for the product, one with a direct reach into the digital ad market. Julia Borston has more.
Disney Plus is the media giant's biggest move yet, away from the TV bundle and towards the digital direct-to-consumer future. Disney Plus for $7 a month or $70 a year has 10 original series and 2 original films at launch, along with 7,500 TV episodes and 500 films from Disney's flagship brand, along with Pixar, Marvel, Star Wars, and National Geographic, as Disney looks to reach beyond families with promos featuring The Simpsons and Avengers.
They're investing for the long term. I think that's smart. They're going to get a massive base in there. And as we've seen Netflix raise prices, when they can, they'll raise prices. You know, it's this kind of Amazon strategy that everybody wants to put into play, which is, you know, trust us, this is a long-term investment, there's going to be a J curve, we're going to have some high upfront costs, but it's going to pay off big in the long term.
There were some hiccups when the app launched at 6 a.m. Eastern. Some 7,000 people reporting streaming errors, according to DownDetector.com. Disney saying consumer demand exceeded its highest expectations and was working to swiftly resolve the issues. Since unveiling Disney Plus in April, Disney shares have gained 18%, while shares of Netflix, facing new competition and the loss of Disney content, have fallen some 20%. But today's launch isn't just about Disney Plus competing for subscription dollars with Netflix and HBO Max. Disney's also looking to grow its digital advertising business, bundling ad-free Disney Plus with Hulu and ESPN Plus, both with ads, for $13 a month, a $5 discount.
I don't see this as a zero-sum game right now. There's so many opportunities to basically add people that we're in the beginning. It's nowhere near, taking subs from Netflix or Amazon. It's just growing the market, basically.
Hulu with ads is competing with Viacom's Pluto TV, YouTube, and next year with NBC Universal's Peacock. All of them looking for a bigger piece of the fast-growing digital video ad market, which Disney projects will be worth over $50 billion by 2022. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Still ahead, upheaval hits one of the heartland's biggest industries. America's largest milk producer has filed for bankruptcy. Dean Foods has struggled in recent years as that industry changed and demand for cow's milk has declined. Company's in talks right now with the Dairy Farmers of America co-op to possibly sell all of its assets. But until then, the future of this 94-year-old company is filled with uncertainty. The nation's largest milk producer owns 58 brands. Names like Dairy Pure Milk, True Moo Chocolate Milk, Land O'Lakes Butter, and Friendly's Ice Cream. And while it says it plans to continue operations for now, today's bankruptcy is the culmination of a series of moves that have rocked the dairy industry.
I regret to notify you we must cease purchasing milk from your dairy farm.
This small farm outside Louisville, Kentucky closed this summer after Dean stopped buying its milk. The reason? U.S. milk consumption has been in a steady decline, down 26% over the past 2 decades, and prices are lower now than they were 10 years ago. Dean combined several of its regional brands and launched the first national milk brand, Dairy Pure. But the growing interest in plant-based beverages like soy, almond, and oat milk has continued to eat into sales. And there's competition from the world's biggest retailer. Walmart began processing its own milk 2 years ago, prompting Dean to cancel more than 100 contracts with dairy farmers across 8 states. And then grocery chain Food Lion cut ties with Dean last year. Dean executives say that they're having advanced discussions regarding a sale of the company to the Dairy Farmers of America. But the gloom hanging over the full range of American farming businesses, pricing issues, global trade turmoil, and a labor shortage here at home, it's not going away anytime soon. Let's turn to Rick Barrett to talk more about what is happening in the dairy industry. He has written extensively about it for the past 15 years at the Milwaukee Journal-Sentinel. In fact, the headline of one of your recent articles, Rick, was pretty telling, I thought. It read, "Americans love soda, fancy water, and fake milk. Can the dairy industry keep up?" What's the answer?
Yeah, it's been a tough time for the dairy industry. I mean, the good news is that more than 90% of Americans still have, still have milk in the refrigerator. That's the good news. The bad news is about 40%, they're drinking about 40% less than they did in the 1970s.
All right. Rick, as you get your earpiece put back in, let me just ask you, the other issue that dairy farmers have been facing are rising tariffs and the trade war. And those are external events that they really have no control over.
Well, that's right. I mean, it's been a very difficult time for them. I mean, milk prices peaked in about mid-2014. And then it was a combination of things. It was runaway production and the export markets turned sour. And that's when things started to collapse. It was mid to late 2014 when prices just started on a downward trend.
But is anybody winning in this industry? Is it just continuing to implode overall? Or what about Walmart? I mean, we mentioned that they started doing their own milk processing 2 years ago. And coincidence or not, that's when Dean Foods started to lose money. So are there winners and losers in all of this?
Well, it's been difficult for Dean Foods because when Walmart opened its bottling plant in Indiana, that took away a pretty substantial piece of business for Dean Foods.
So how do you see this playing out, Rick? I mean, I know milk prices are going a little bit higher. Is that, do you think, the start of a trend?
We certainly hope so. I mean, milk prices have been on the mend lately. They're a little bit higher than they were, and for 2020, it's looking better. Now, the situation, though, is that milk prices, even as they're coming up for farmers, it's going to take a long time for them to dig themselves out. I mean, a lot of them are behind on their bills. The debts have piled up. It's going to take a while.
Yeah, I mean, what struck me from reading your series of articles that you did this fall about the industry is that it's about the local dairy farmers in your part of the country. Is it going to get better for them anytime soon?
We sure hope so. It looks like 2020 will be a little better year for them. But again, it's just going to take a long time. For some of them, there's been so much damage has been done to the balance sheet, they might not be able to recover.
Rick Barrett with the Milwaukee Journal-Sentinel. Rick, thanks for joining us tonight. Appreciate it.
Thank you.
A warehouse fire hurts Tyson's earnings, and that's where we begin tonight's market focus. The maker of Ballpark hot dogs and Jimmy Dean sausages missed estimates, hurt by a fire at one of its beef production facilities. But the CEO says pork prices are rising after a shortage of pork products in China as a fatal pig virus is tightening supplies there. Shares climbed nearly 7.5% to 88.88. Factory equipment maker Rockwell Automation beat expectations thanks to demand in its electric vehicles unit.
In automotive, we had a better than expected quarter, and some of that strength came from the continued rise of electric vehicle production. And so electric vehicle drivetrain, the battery production, the motor winding in those electric vehicles is a great market for us, and we've had some important business there.
And shares rose 10.5% to 198.01. CBS fell short of revenue estimates, hurt by falling advertising sales following a nearly 20-day dispute with AT&T. CBS stations went dark for more than 6.5 million DirecTV and AT&T customers because of the contract dispute. CBS shares fell more than 3.5% to 37.76.
Elsewhere, home builder D.R. Horton topped expectations thanks to lower mortgage rates, and that lifted buyer demand. Company raised its home sales forecast. As a result, it also raised its quarterly dividend. Shares rose about 3% on that news to $54.27. Then after the bell, online dentistry company Smile Direct Club posted its first results since going public, and in the process, it topped analyst revenue estimates. Company also raised its full-year outlook. Shares were volatile, though, in the initial after-hours trading tonight. They closed the regular session down more than 6% to 11.08. Also after the bell, cannabis company Tilray reported a 400% jump in quarterly revenue. The company's CEO sees even more growth in the global industry.
The last year has been highly volatile, but there's a lot of pressure on the entire industry. What I'm excited about is that it's still day one in this industry. If you think about 41 countries that have legalized for medical, I think that will increase to 80. And currently, there's only 2 countries in the world, Uruguay and Canada, that have legalized for adult use, and that number will increase.
Shares were volatile in initial after-hours trading. They closed the regular session down more than 1.5% to 21.57.
One of the hottest sectors in real estate is seeing a strange chill. Warehouse leasing is plummeting, but not for the reasons you might think. Diana Olick explains.
The amount of warehouse space leased in the last 3 months was less than half what it was a year ago, according to Transwestern. And it's not for lack of demand, it's because there's just so little to lease. The boom in e-commerce caused demand for modern spaces in prime locations to spike. Developers are rushing in, but not fast enough.
Increasingly, what they're trying to do is find locations that are closer to the end delivery point. And as a result of that, they're facing increasing challenges finding locations that make sense for them from a size standpoint, from a location standpoint, and from a cost standpoint.
Tenants are signing leases on properties that aren't even finished yet, and developers are building most of their new space on spec or without signed tenants. In the last 4 years, demand has outpaced new warehouse completions by 169 million square feet, according to CBRE, and rents have increased 19%. Unlike other retail sectors where outdated properties can be renovated and relaunched, that doesn't work as well for warehouses.
Logistics companies need boxes. They don't need, very high clear heights with manufacturing devices internally. They don't need cranes, et cetera. And so trying to repurpose those properties is very, very expensive. And oftentimes they're not located in places that are advantageous from a logistics standpoint.
Warehouse REITs have been outperforming for several years, but now there's growing demand from private capital. Not only do more tenants want these spaces, more investors do as well. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, big growth in the Deep South.
It isn't just rockets fueling growth here in Rocket City, USA. Here in Redstone Arsenal, the FBI is undergoing a major expansion. Just one example of the investment coming into the Huntsville area. We've got that story coming up on Nightly Business Report.
Here's a look at what to watch for tomorrow. The Federal Reserve Chair, Jerome Powell, will deliver his economic outlook to lawmakers on Capitol Hill. Dow component Cisco reports earnings. The focus will be on what the company says about business spending. A Senate panel holds hearings on the outbreak of lung illnesses linked to e-cigarettes. And that's what to watch for on Wednesday.
Wall Street bonuses are set to go down this year. According to a new report, equity traders will likely fare the worst, with a decline of as much as 15% compared to last year. And debt and equity underwriters could see a 10% reduction in their bonuses. Despite the healthy market, industry watchers say that banks are focused on cutting costs as competition increases.
Nissan cut its full-year outlook following a 70% decline in its earnings. The automaker now expects to sell about 5% fewer cars than initially anticipated and said its dividend could be, quote, revised. The company has been facing slowing growth abroad and has been struggling to move on from the arrest of former chairman Carlos Ghosn.
The aerospace and defense industry is entering a new era, and it's making a very big bet on a place far from the Pentagon. Morgan Brennan, as you saw, reports on the resurgence of Huntsville, Alabama for us tonight.
It's called Rocket City, USA, home to one of the highest concentrations of engineers per capita, an educational system that teaches STEM starting in elementary school, and long-standing ties to aerospace and defense.
We have legacy, so our aerospace heritage, we work very hard on that to make sure that we maintain that. So we have about 400 aerospace companies in our market, so very rich concentration of them and a lot of expansion in that.
And the emergence of commercial space is only helping to propel it. Jeff Bezos' Blue Origin is building a $200 million rocket engine factory in Huntsville and has taken over an historic test stand NASA's Marshall Space Flight Center once used for the Saturn V rockets that launched Apollo astronauts to the moon.
It has this great receptacle of talent there that you can tap into, and it's been decades in building. So we wanted to go to where the talent is.
There's been a boom in defense work as well. Hypersonics, or missiles traveling at Mach 5 or faster, are being developed here. That's helped lure Aerojet Rocketdyne to move its defense headquarters to the area. And Lockheed Martin recently broke ground on a hypersonics facility just outside the city.
They're trying to become an innovation hub of the South with artificial intelligence and other technologies, quantum computing. Space is faster than hypersonics, so all those technologies can be brought together with AI.
That combination and the area's deep roots in STEM have attracted other industries as well. Polaris spent $190 million to open a factory here just 3 years ago, assembling Slingshot and Ranger vehicles. CEO Scott Wine says it was an easy decision to make.
I think the long-standing commitment to engineering that's been in Huntsville for so many years, since World War II, really, and then with the Redstone Arsenal there and the Army Stratcom there as well, there's just really a good infrastructure of personnel.
And Polaris isn't alone. GE, Toyota, and Mazda, even Facebook have been making investments. Even the FBI is busy expanding what it calls an HQ2 on the Army's Redstone Arsenal. From 2000 to 2017, the Huntsville metro area grew population, jobs, and wages all at roughly 2 times the national rate. And at a time of low unemployment across the U.S., here it's a stunningly low 2.1%. Hudson Alpha, a nonprofit biotech collective focused on genomic sequencing, is based at Cummings Research Park. It includes companies like Serena Therapeutics, which has developed a polymer technology that could change treatments for Parkinson's disease, epilepsy, even opioid addiction. But it all comes back to space.
I love the fact that I have real rocket scientists working in my lab now, because they've come from that industry to work here as well.
For Nightly Business Report, I'm Morgan Brennan in Huntsville, Alabama.
And before we go, here's one more look at this unusual day on Wall Street. The Dow closed the session unchanged at 27,691. The last time that happened was in 2014. The Nasdaq was up 21 and the S&P 500 added 4 points.
I don't know about you. I think I'm going to go home and drink a glass of milk.
I feel like I have to do my duty as well.
Support that industry.
Yep.
Yeah,
support that industry and the state of Wisconsin. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.